Welcome in live. Total return, guys, in the past month, $127,150.88 achieved in just over 1 month. Top returning asset, $78,722.32, guys, is the profit we've been able to generate from our oil and gas play. Most people don't even have an oil and gas position in their portfolio today. And so many people I'm talking to every single day this week are massively misallocated. We're going to help you guys get properly allocated for the new world we all live in today. All right, the total return on the high risk portfolio, guys, that's what we're going to give you if you have less than $500,000 total in investment capital today. We're going to give that to you for free, only if you unmute your microphone, jump in there, type in your cell phone, okay, and your email. We're going to give this to you guys 292.13% total return, guys, net return in just 10 months. Okay. All right. And we have a bunch of questions coming in. Yes. Sanjita said, can you explain risk parity? Yeah, absolutely. We're going to get into all that stuff, Sanjita. Yep. Kern, I'll cover your question too. Okay. Beautiful, guys. All right. Very, very good. So just 10 months, guys, 292.13%. Look, I know those returns are stunning. Okay. A lot of you are going, whoa, no way. Hey, look, guys, we have less aggressive portfolios that our millionaires and multimillionaires are using. Okay. And we'll show you guys what those look like in just a second too. But look, I love that Kern wrote in. He said based on $100,000 starting portfolio. So Kern, this is based on 100K, right? So if you start with 100K behind this portfolio day one of this year, first trading day, you allocated 100K. You're now sitting on $392,130 in just 10 months, guys. Okay. Top performing position over the past 10 months. That's been Nrgu. It's been going back and forth with our Ethereum position that you can actually own with the stock. It's really cool. We'll talk about that in a second, but it's up 229.92%. That is our oil and gas play. It is the top performing ETF in the entire stock market this year in the US, at least. All right, time it took to follow our 250+% portfolio in 2021, just 20 minutes, guys. Really simple. We're going to optimize your time. Okay. My goal is to make you money with this portfolio during your one-time free trial. This is how we've brought in more than 1,000 clients into our client base. Now, we're not a massive investment bank like JP Morgan, right? So we actually limit the number of investors we work with each day. It's a little more exclusive here, guys. So there's only 3 spots per day. Okay. Very good. Yeah, Sanjit, I'll go into a little bit of my background too. Great questions, bud. All right. So before the webinar is over today, we'll be giving out 3 $15,000 discounts to the first 3 clients that can work with us. So stay tuned for those special savings and another bonus I'll reveal later. Thus far, our top performing trial student has made 97,000 plus during his free trial in March of 2020. This is the best part, guys. While the stock market crashed over 35%. Welcome to Risk Parity. Here's actually the exact email that Ron up in Wisconsin sent me. Okay. And you guys can see here on the lower left-hand side of the screen, and I know it's a little small. Okay. But look, this is what he sent me. He made $97,019.89. Okay. Look, I'm not here to waste your time or mine with BS, guys. We let the BS walk. We let money talk. Here's another one of money talking. Okay. This is an email Don sent me. Now it's important to note, Don wasn't on a free trial. He was actually a customer that had pretty substantial capital behind us. Okay. So his name is Donald Dickey. He sent me this email. He said, Dean, today was my first time in my years of trading that I topped a $100,000 profit. Thanks, portfolio builder. Sure beats the dividend stock program. Glad you guys showed me the correct way. So it's funny. I was actually just talking to a really successful gentleman up in Canada yesterday. It was like, Dean, I'm really thinking about doing these dividend plays. Well, guys, dividend plays are great if you want to limit how much money you can make during quantitative easing. I don't want to do that to myself. I don't want to do that to my customers. So we're not going to show them that type of setup. All right, guys, I want to call your attention to this really, really quickly too. Okay. This date is March 16th. So I'm going to go ahead and just highlight this one more time, guys. It's really important to concentrate on this date. Anyone know why that's a really, really important date and why it's actually historically significant? Okay. So if you have a decent size 401k, IRA, individual account, maybe a mix of the three, guaranteed if you have more than 6 or 7 figures in assets, maybe have more than 8, you know what that day is, because you're feeling pain if you didn't have risk parity. Okay, so just really quick, and I'm going to write this up on the screen. Does anyone remember the day, March 16th? Why was it historically significant financially speaking? Okay, so once again, guys, we're going to write this up on the screen. This is March 16th. Anyone? And I'm going to take some guessage here. Okay. Kern says, wasn't that the bottom of the Corona low? So no, it wasn't the bottom, Kern, but you're close. Okay. Great, Kern, and I love that you typed that in. Anyone else know why March 16th was really significant? No, Kern. In the bottom low was the day that they announced quantitative easing. So if that doesn't tell you how much control the Fed has over the stock market, I don't know what will. Okay, and we'll actually take a look at that in just a second. Okay, guys. So March 16th was the first day the S&P 500 lost $890 billion. Okay, it set a record for single day evaporation of assets, almost $1 trillion, almost hit $1 trillion, really, really close. Okay, very good. Cool. Oh, cool. He said it was also his wife's birthday. Awesome, Kern. So very good, guys. So look, March 16th, the S&P 500 lost 14%. Now, did Don lose 14% of his portfolio? No. Don made 100 grand for the first time in his life. Okay, guys, and this wasn't from doing some super risky BS day trading or option trading system that's sold in masses every day, and you guys have probably all bought those services before. Okay, look, this was Don simply scaling back his defense to make his $100,000 for the first time in his life. Now, this is one thing that's really important to point out to you guys. Don had been in the market for 43 years before he wrote me this email. So just kind of cool, and welcome to having a defense and profiting from a defense. All right, now you'll probably want a refresher on what our clients have to say in our track records before you test us out today. Okay, so with that being said, guys, I'm going to bring on Jeff Olson. Okay, so Jeff is one of our clients, guys. Okay, and he's nice enough to be able to hop on and speak with potential clients. So Jeff, if you have your microphone, bud, we'd love to hear from you. Okay, and it was really cool. He actually texted me yesterday that he was up over 100% for the first time, and he started working with us guys last year. You know what? So I think actually Jeff might be having some internet problems, unfortunately, guys. So he's actually haven't seen him unmute his microphone yet. But what I'm going to do, guys, is just put his number up on the screen. All right, so you should have my number at this point, and I want you to save another one. This is Jeff Olson's number. Okay, now he's a client of ours, guys. He's not paid to talk to people on the phone. He's kind, and he's one of those few good people that's still left in the world. He's willing to share his client experience with you. Okay, and he's going to share his exact return. But when I talked with him yesterday, guys, he hit 100% return in a year and a half for the first time in his life. Okay, and he's using a blend of our portfolios. So he's using a blend of our most aggressive and our least aggressive portfolio. A lot of our clients using 6, 7, and 8 figures with us like to use that blend.
Per barrel.
Okay. Let's see. And Reggie, thank you for muting that, bud. I appreciate that. Very good. Okay, so welcome to Portfolio Builder, guys, and that's the name of my company. Welcome to our investing webinar. I really appreciate your time, guys. My name is Dean Gallagher. I'm going to be leading the presentation today. Okay, and I want to encourage all of you to ask as many questions as possible. Okay, so please feel free to jump in there, guys. Our website is portfoliobuilder.io. You won't see too much there until you're a client, and we'll show you guys what you'll see as a client at the end of the presentation today too. Okay, so save my personal mobile number to your phone now. Okay, my number is 505-322-7515. Okay, so feel free to write that down, guys. 505-322-7515. And guys, it's important to know that 505 number is an area code from New Mexico. That's where I was born and raised, but I've recently relocated my family to Wellington, Florida. Okay, so I'm in Southern Florida now. All right. Now we're all here to get portfolios built out live. So we give you the portfolio to try for free, guys. I want to stick money in your pocket. John wants to stick money in your pocket. Edgar wants to stick money into your pocket, guys. That's why we're all here today. And that's why I'm giving you my time for free. Okay. So total number of the positions, guys, in our high growth, high risk portfolio, it's 4 assets. It's simple. It's going to take you guys minutes to put this together. Okay. So now what you might be thinking, well, what do I need to get these type of returns? Okay, you're gonna need 4 things, guys, and this is critical. You're gonna need a brokerage account that you can make investment decisions within. Our clients are using IRAs, 401ks, and individual accounts to grow with us. Some of them are even opening investment accounts, literally businesses, guys, structuring businesses around what we're doing. It's really cool. Okay, number 2, you're gonna need a cell phone for text message and email trade alerts. Now, guys, another critical thing, you're only gonna need 1 hour a year to follow our positionings. That's it. Okay. We've only made 6 changes to this portfolio to make a 292% return. Okay. And number 4, guys, you're going to need the ability to read text messages and email. So really simple. So before we get you those track records and client reviews, let's help you understand one major aspect of what we do. Okay, guys. And I want to just ingrain this word into your head for the rest of your life. Risk parity. Okay. Look, I actually just got off a call and she says, well, what makes you guys different from like the Tim Sykes stock scams out there? Well, guys, we teach you what the billionaires do, not what the people that aren't billionaires do. Okay. And the coolest thing is, guys, it's scalable to any investment size. Okay. So we're going to go ahead and teach you guys about that today. Okay. Very, very good. Kern typed in, are you expecting NRG to pop back up? Yeah, Kern, we're looking for NRGU to blow your doors off over the next year. Yep. And so the pullback is something you want to absolutely buy into, Kern, and we'll see exactly how much money you want to use, bud, a little bit later in the presentation, okay? So what makes the portfolio crash proof, guys? It's our insurance. Never heard of an insurance position in a portfolio? Most haven't before meeting us, and you're not alone. Now, it's time to help you understand defense and what we use for stock crash insurance. Okay? So I'm going to tell you guys a little bit about what doesn't work too, and the misconceptions I hear every day from people that don't understand risk parity. Okay, might just be jumping into it for the first time, but what I'm going to do, folks, is simply look at 2 assets here. Okay, now on the bottom, guys, real simple, we have the S&P 500. Okay, so that's going to be the green line, and I'm going to trace this out for you. Okay, and once again, guys, we're not sitting here doing technical analysis. I just want to point out some things for you. Okay, so there we go. S&P 500 is one line. Okay, and I'm just using colors and really cool, guys. I actually had a former hedge fund manager. Okay, I'm actually just going to type in defense or write up defense here. I had a former hedge fund manager actually call me. He said, Dean, what you're doing is freaking genius for the small investors that don't have the money to invest into a hedge fund. Okay, and just so you guys know, if you want to put money into one of the good hedge funds, okay, that runs risk parity, literally you're going to go spend $5 million to even touch the fund. Okay. With us, you don't have to do that, guys. It doesn't matter if you have $25,000 in your investment capital, or if you have 2.5 million, or if you have 25 million. You can build this strategy out today. Okay, so our defense, okay, is simply, folks, with UVXY. Okay, so that's our defense. So it's really cool, guys. As and what I'm going to do here too is just highlight 2 critical points in time that if y'all have a lot of money in the market, you probably remember really well. Okay, so first point we're going to highlight is 2020. Second point we're going to highlight, folks, why we didn't have quite as bad as a volatility crash there, is also 2018. Okay, so I'm going to go ahead and write up on the screen here. So 2018 is right here, and this is 2020 right here. Okay. And you guys can notice that there's an asset that goes skyrocketing upwards when the market crashes. Okay. What is this asset? Well, it's UVXY. Okay. What is this asset? Goes skyrocketing upward. Okay. And this move, guys, from here to here was just shy of 1,200%. The actual exact total was 1,187%. It went up in value. Once again, this is UVXY, while the S&P 500 crashed 35%. So bonds don't work right now. Gold doesn't work right now. We'll tap into that in a second. But look, guys, we insure our cars, we insure our houses, we insure our buildings, we insure our real estate, we insure our houses, right? Our clients also insure their equity positions, okay, or their stock positions, okay? So very good. And I just wanted, now really quick, I want to see if anyone has any questions on that. Man, I'm so glad the former hedge fund manager told me that too, because it's really just critically important to explain. And I actually like spending just a moment here, seeing if we have questions. Okay. Very, very good. Okay. So anyone in the webinar, any questions on how to easily balance your portfolio, okay, using risk parity in today's environment? Okay. Don't see any coming through.
What's your phone number again?
Yeah, Rich, it's 505 322 7515.
505 322.
7515.
Okay, thank you very much.
Yep, absolutely, Rich. Yep. Okay, guys, so beautiful. Now let's go ahead and jump back into the slides and let's help you understand misconceptions. And I actually cracked up this weekend. I watched a hedge fund manager just bash gold. I mean, just bash gold at the largest investment conference in the world over the weekend. And it's pretty freaking funny because I thought it was so true. And he said gold 5,000, Bitcoin 500,000. And I said, you know, the guy's probably not wrong. Okay. So why doesn't gold, bonds, being in a mutual fund, or cash or money market work right now, guys? Okay. Because none of them do. Well, there's something called quantitative easing going on. Okay. And is quantitative easing here to stay forever? No. But is it here right now? Absolutely. And is it at the highest pace and rate we've ever seen on a global basis and in the US basis? Absolutely. Okay. But we're there. So guys, being in the mutual funds doesn't work right now because they're using bonds to hedge. And we've already just established that bonds don't work during quantitative easing. Actually, we're bearish on them. Okay, so gold doesn't work, bonds doesn't work, mutual funds don't work because of, guess what, bonds. And guys, if you think you're going to stay in cash or be in a money market, feel free to lose 10 to 15%, or even in an annuity. I can't believe how many people are in annuities right now making like 2%. I talked to a lady actually in Florida that was making 3%. But guys, cash is going backwards right now at 10 to 15% a year. Okay, so if you're not accelerating your capital upwards past that level, you're going backwards. All right, so what's the number one unknown risk to US investors today? It is cash in your account, guys. Another thing I want to highlight and drive home for you, cash is trash. To give you an example of that, guys, okay, cash value over the last 93 years, okay, I'm gonna put this right on Ray Dalio's head too, has lost 99% of its value. What has the S&P 500 done conversely over the same 93-year span, folks? It's gone up 17,500%. And that is a percent. Okay. So the godfather of this quote, and I wanted to write these stats on his face today, and thank you, Ray Dalio, for making that quote. And thank you for showing us what risk parity is as investors. Okay. And guys, if you don't know who Ray Dalio is, he's the most successful hedge fund manager of all time. Okay. And he's also, at his age, the most successful investor on planet Earth. Now, Warren Buffett does have more investment capital and has a higher return at this point, but he's older. At his point in life, he is smoking Buffett. So 10, 20 years from now, the godfather of finance will then be Ray Dalio. Okay, but let's help you guys understand that before. If you have a lot of capital in the market, you already know his name. All right, so did you know your cash is burning up sitting in your brokerage or bank account? Well, why? Because once again, folks, the Federal Reserve is printing money at the fastest pace in US history. So you can leave your hard-earned money in the fire, or you can learn to invest it safely today. Okay, now we're gonna run a poll to help you really understand what your cash fire is today. Okay, so folks, please take just a minute, respond to this poll. And as I launch this poll, guys, I want you all to know it's 100% anonymous. Okay, so when you select your answers, guys, just know it's anonymous. All I'm going to see is a percentage. Okay, and that percentage helps me identify, hey, you know, do we have a group in here that's using over $500,000 total in investment capital, or maybe they have a couple million just sitting in cash, right? Hey, if we see some of those respondents, guys, then we're going to go ahead and help people with the 90-10 blend. Okay, if we don't see anyone that has over $500,000 total investment capital or a cash burn over $500,000, we're just going to focus on our most aggressive portfolio today. Okay, so go ahead, folks, and respond to that poll. Okay, it's 2 simple questions. Okay, question number 1 is, investors, it's critically important to review how much cash the Federal Reserve is burning in your ecosystem. So let's seriously think about the cash you have sitting in your brokerage / bank accounts today in this exercise, and please select a response. Okay. So the second question is, why are you letting your cash burn today? Okay. And the number 1 answer I've gotten during 2021, folks, is I honestly had no idea inflation is burning my cash at the fastest rate in US history. Okay. Very, very good. Okay, beautiful. All right, guys. So looks like we have I had some more questions come in while we went through those last few slides. So I'm gonna go ahead and address those. Okay, let's see here. Kern says, what if we have a crash in the energy sector, but not in the general S&P 500? Then UVXY will not help us. No, Kern, the energy sector has absolutely nothing to do with UVXY at all. The overall stock market is absolutely linked to volatility, though. Great question. Beautiful question, Kern. You've had great questions all day. Please keep them coming. And if you can, Kern, unmute your microphone, bud. I'd love to hear from you too. It's just easier to address follow-up questions and that type of stuff if you ask them directly on the webinar. Okay. Okay, guys, it looks like so far 26% of the audience has responded to the poll so far. Okay. And it looks like so far most people have less than $500,000 in the cash fire today. So we'll probably be focusing on the most aggressive strategy. But if someone types in that they have, you know, $500,000 or more at sitting in cash, we'll help them with the 90-10. Okay, beautiful. Okay, guys. So 33% of the group has responded, and I'm just going to go through, do a quick roll call here. So John Holton, welcome in. Thank you for taking the time to join us. Tyrone, Shelley, Scott, Ronald, Reggie, Nad, My D-Town, Michael Proof, Leonard Barnes, Larry, Lamont, Kern, Kayleen, Cameron, Cam Lou. Let's see here. Who else do I have? John Holton, Jim, Jeff, Jacob, Irene, Hirat, David, Dar, Celeste St. John, Calvin McKay, ABC. Let's see here. And I see Sanjita Patel, Know the Truth, John A. Boniface, and Gil Kaysen all have their microphones unmuted. Awesome. Awesome, Sanjita. And Sanjita wants to do a 300K allocation in an IRA. Beautiful, bud. Okay, guys. So let's go ahead. All right. And so just really quick, everyone, it's in here. If you haven't responded to the poll, folks, please take just a minute to do so. Okay. And I'm going to give it 30 more seconds, guys. If you haven't responded to that poll, please make one of the 2 selections really quick. Okay. And then we're going to go ahead and jump into building portfolios. Okay. And we're going to show you guys track records in just a second too. Okay, cool. Very good. Looks like 37% has responded now. Okay, and I'm going to see, so 55% of the group, guys, is looking for a safe portfolio or system to invest with currently. Okay, looks like a few people just got control of their IRA or 401k, want to invest it safely. Okay, very good. A few people honestly had no idea inflation is burning their cash at the fastest rate in US history. Love seeing that answer. It's actually growing in popularity as we go here. Yeah, Sanjita, great question. Yes, absolutely. Sanjita says, can this work with altcoin and Bitcoin? Not sure about the market. Yes, Sanjita, and actually, cryptos crashed harder than the overall market did, than the S&P 500 did. So it's not an exact correlation, but when risk assets sell, they all sell. Okay, so yes, that will bring cryptos down with the stock market as well. Okay, great question. Love the questions coming in from this group. Okay, guys, so very good. Looks like over half of the audience has responded to that poll. So I appreciate your participation, guys. I'm gonna go ahead and end it now. And we're gonna go ahead and show you guys some track records. Okay, and go ahead and get you guys built out. Okay, so you guys saw the most successful hedge fund manager of all time, Ray Dalio, that invented risk parity. I want to tell you guys something you may not have known too. Okay, so Warren Buffett now runs risk parity portfolios. Okay, you know what? He didn't before Ray Dalio designed risk parity. So I think that should tell you who's the smarter guy and if you put him in a room. Right? Okay, cool. Now, one rule though, folks, I learned in my 20s after I took the biggest bath of my life in the stock market were these two rules. I studied every single thing Warren Buffett had ever published. That brought me actually to learning more and really diving even deeper into what Ray Dalio does. But it's really cool, guys. And I'll never forget these rules. Let's see here. Kayleen asked, can you talk about ways to take control of your IRAs? Yeah, Kayleen, as long as you're not working for the employer, you can absolutely just switch it over to self-direct, or you can call either your money manager and say, hey, I'd like to remove your advisory fee and your control of my capital. I'm going to go ahead and self-direct that money. Boom. They're gone and their forever fee is gone with it. Great question, Kayleen. Glad you asked that. Yep. And John actually just got done doing that. John, do you want to jump on and tell Kayleen about your situation just to help her out? Okay, I think John might have had to hop off to take a phone call. Okay, cool. Well, hey guys, just wanted to put those rules on the screen. Why do we use our insurance? Well, see rule number 1 and see rule number 2. Okay, so we love to sleep like babies at night, knowing we're using risk management to protect our hard-earned nest eggs. Proper risk management provides consistency and reduces stress. Many non-billionaire investors don't understand hedging risk, aka their long positions or their long stocks. However, this is what helps our investors and our client base sleep like babies at night. In fact, some of our biggest gains have been delivered by existing hedging, okay, or you can call that defense or insurance, for massive profits when the market tanks. Let's review some proof from our clients together, and we'll review some of our track records as well. So let's take just a minute to do that, guys, and we're not going to focus too much on that, okay? But what I'm going to do, folks, is just take you to our homepage here. Okay, I'm going to click on the testimonials, and I'm going to walk you through those testimonials here really quick. Oops, sorry about that, guys. Go to a different thing here. Okay, going to a different page, and sorry about that. That was our headline from yesterday. And hold on one second, guys. My website's lagging just a hair. Yeah, maybe it'll be easier to just do this. Huh. Might have too many people on it. How weird. Or maybe my computer has too many screens open. I'm not sure. Okay, well, we'll forget about the, oh, there we go. There we go. Okay, so it's really cool, guys. You can actually come and click on this little play button.
Can you hear me, Jay?
Yes, sir. How's it going, Philip?
Going very well, thank you. Enjoying the market. I thought I mentioned that I'm up 18,000 or 25% since I started.
Way to
So
go.
So it's really cool, guys, and you can just play these, okay, when you come in. Here's a guy that actually has north of 5 million behind us. I'm going to play his really quick.
Well, I think the system has really proven itself today and right this week with the ability to make some money while everything's crashing. I'm very impressed with this. Proves the system.
Now I'm also going to play one from a gentleman that has less than 100,000 working with us, and Jerry is such a cool guy.
I must say that you and your partners are doing an incredible job. I'm even talking to my doctor about what you're doing, and
Cool.
he's getting excited. It's been a blessing to.
And it's really cool, guys. Jerry's doctor is not one of our clients. And hey, Jerry, hope all is well up in the big city, bud. Okay. Now I'm going to play one more from Mark in Dallas. This one's kind of fun. Mark, how much are you up today, bud?
I'm up 83,000 today.
Yeah, baby.
And that's on top of 39 yesterday.
Woohoo!
35 yesterday.
Awesome, Mark. Awesome.
Yeah. Hey, thank you. Because I would not be in this positions if it weren't for you. I'd probably be losing money today.
I love it, Mark. Well, hey, bud, I told you we're gonna take the thrill out of the market for you. Okay, so Mark made 108,000 guys on March 16th as well. So pretty cool. It's really neat too, guys. Once you're a client, you'll actually be able to log in, okay, and go through all of those recorded webinar sessions, okay. And it's kind of hilarious. You can actually hear on March 16th, literally our clients bragging about making a cumulative millions and millions of dollars on the worst sell-off day we've had since 1929. Okay. Yeah, Kern, great question. Mark was using over 500,000. I don't know his exact number. He was somewhere between 500,000 and $1 million that he was using. Yeah, Sanjita says, are the sessions recorded? Yeah, and it's really cool, Sanjita. So I'm actually going to go over to this here. Okay, I'm going to go on our website really quick too, and I'm going to give you guys a little preview. Okay, so I'm going to go to our membership login page. Okay, and this is what you'll have access to as a client. Okay, and I'm actually going to log out just to show you guys exactly what it looks like. But once you guys do pay for the service, you're going to have access to this. Now, I'm also going to go ahead and shield our positions here, so you guys can't see the tickers or what they're used for. But what I will show you, okay, is how all of these assets change, okay, and show you how it will go in beautiful ratios, okay. So this is so cool. So Sanjita wanted to use 300,000, right? So let's just say if Sanjita was a customer, he could go here, type in 300,000. Okay, hit calculate. Boom. Sanjita is going to know exactly how many shares to buy to get behind our most defensive strategy. Okay, and you'll see the asset allocation percentages, the cost, and the number of shares. Now, once again, the tickers are right here. Okay, and I'll just tell you guys one thing. The defense, okay, is UVXY. We've already taught you about that. That's what we're using currently to defend all of these long side assets. Okay. Now, I'm not going to tell you what those tickers are. Okay. You're going to have to type in your name, your phone number, and your investment capital in a minute. Not now, though, guys. Okay. In a minute. Okay. Kayleen asked, when did you get into NRGU? Yes, Kayleen. I believe it was either 128 or 126 when we got into it. Okay. Yep, great question. Yeah, Kayleen, and we're looking for substantial more upside in that position. Substantial. Okay, and we'll tell you guys when to sell it too. All right, so I just wanted to share that with you guys really quick. Okay, and one more thing. Let's see here, and and does someone have a question too? Let's see here. One more thing too, guys. That I'm going to do for you here. Okay, I'm also going to go over to our position calculator. Let's see here. Okay, beautiful. Okay, so awesome, guys. So let's now go ahead and take a look at the track records. Now, I told you guys, look, we do have another system that we run that are, that are people using over $500,000 like to invest with. Okay. This is what our clients love stacking hundreds of thousands of dollars behind. That's our 90-10 blend. You put 90% into our pro strategy and 10% into our high risk strategy. Okay. That return, folks, is smoking the S&P 500 while being hedged and globally diversified. Okay. It's up 34.34% for the year, smoking the S&P 500 to the upside. Okay. Now, the next one I'm going to talk about to you guys, and this is what we're going to give everyone today, is our high risk, high return portfolio. It's up a stunning 290% this year. It's insane. Okay. And look, a lot of our clients will hybrid, right? So they'll do, maybe 30% of their capital goes into this. They'll put 70% into the pro. That's what Jeff Olson does. That's what the guy that's made over 100% in the last year and a half working with us. Those are the ratios he's in today. And you guys have his number to call and talk to. Okay. So this one, guys, is up 290.79%. We've only made 6 changes to this portfolio. And we've had downside protection the entire time. Okay, cool. Very good. Okay. Cool. Very, very good. And Sanjita, yeah, we will absolutely get you a track record in just 1 second. Hey, Gil, how's it going?
It's cool, man.
Nice. Getting that microphone all straightened out? Okay,
It
cool.
should be unmuted.
Yep. I can hear you loud and clear, bud. Okay, perfect. All right, guys. Now that you've seen our track records, I want to introduce you to my team. Okay. And I'm going to talk about a gentleman really quick. His name is Jason Cox. He's our founder and our chief investment officer, guys. Sanjita earlier asked for a little bit of our background. So I'm going to give that to you, Sanjita. So Jason and I, okay, lead the portfolio development, but Jason absolutely has the reins on that. Okay. He's our founder and our chief investment officer of Portfolio Builder. Okay. Really neat guy. I'm going to tell you guys the story of how Jason and I met. So we literally met in college. Okay. And we constantly found ourselves talking about investments in business and, well, trying to make some money. Weird. The same stuff we still talk about every day when we see each other. Okay. And it's really cool, guys. That grew into our first finance company. And it's crazy, guys, because we were actually helping idiots like Tim Sykes make more money and sell his product by running his business side of it, basically, right? Okay. And Ryan helped us with that too. And then, guys, we realized we go out to collect testimonials from our client base. And Tim Sykes, I remember this year, he's bragging about being up 36% for the year, front running his clients, right? So we emailed like 1,800 people to ask them if, what their returns looked like, what their success looked like. We didn't get a single return email. I'm not kidding you guys. I have hundreds of return emails, and we have an entire page built on our client testimonials. Okay. So anyways, long story short, we helped the hypey option trading guys. Chuck Hughes was another guy we actually helped a long time ago. God, what a disaster that was too. We emailed like 6,000 customers to see if we could get a testimonial. Not a single person made money with it. And so we went, okay, we don't want to be involved with this anymore. We're going to go do our own thing. So here's Portfolio Builder. Literally, years later, guys, it's so cool. It's 100% employee owned by us 3. Okay. We're not some huge firm. That's our story, guys. Look, we found finance by fire. I was super fortunate, Sanjita. I had a gentleman named Gary Johnson teach me risk parity. He's not famous. You guys won't be able to Google him or anything. He actually died of brain cancer, but he taught me risk parity before that happens. And it's hilarious because that's what got me into the market. Jason loved the theory of risk parity. That's how we started studying Ray Dalio. That's what brought us to where we are today. So Sanjita, thank you for asking about the story, but I've never really had the opportunity to tell that live. So I figured I'd take some time to do that today. Okay, guys. Now, John and Edgar, are two gentlemen I've brought on my team recently. Okay, guys, our business is growing in popularity so fast. I didn't have time to talk to anyone, and I still don't. Okay, but these guys have a lot of money behind us, and they can help you too. Okay, and they're doing an incredible job doing it. So thank you, John, and thank you, Edgar, for doing such a great job for us. So that's our team, guys. All right, so just wanted to show you some faces, right? If you see me walking around Florida, come say hi. All right, so now that you know how we perform and understand why our clients happily pay for our service, let's get you a minimum investment of 10 grand to 500 grand so we can stick some money into your pocket. Okay, if you'd like an exact amount to test drive, let me know. All you need to do now is buy the exact number of shares to test what we're doing that we recommend in your brokerage account. This way, you can test out the best assets to own immediately and test drive risk parity for the first time. It'll take you less than 5 minutes to purchase. Okay. Now, do you want an allocation over 100,000? Let's say you'd like to test drive 250,000. Since you understand the safety and the fact that cash is trash, great. Simply type into the chat box or unmute your microphone by using the Zoom platform. Okay. Now, if you have over 500,000 total, you self-direct today, I'm going to recommend a more diversified portfolio. Okay. So if you have more than 500K in your accounts, type in your email, cell phone number, and name into the chat box now. All right. So call to action. It's time for you to start making some money with the flagship portfolio. Let's get you started with the minimum allocation from 10 grand to $500,000 or greater, as many clients choose. It's time for you to build out the portfolio so we can stick some money into your account safely. Okay. We'll recommend the high risk / high reward portfolio for those under 500,000 in total capital. For those that have over 500,000, we're going to recommend the 90-10 blend. Okay. And I'm going to talk about that for just a second, guys, just so we can really cement which portfolio is what. So the high risk, right, guys? That's the one that's up 200 and I think it was 92% when we started up. Okay. And the 90-10, guys, is the one that's way more diversified, way more balanced. Okay. This is what our people using over 500,000 just love. It's up 37, I think it was 0.26% for the year. Okay. So just want to cement those and cement that in your head. Okay, cool. So beautiful. So let's get to sticking money into your pocket. So let's go build some portfolios to help you all invest like billionaires. It's all about getting the best assets and hedging risk. This is the long-term billionaires approach to investing. Okay, guys, I want to give you a little secret here. The billionaires all use risk parity. They don't day trade. They don't use options. They don't swing trade. They don't have 99% of their money in real estate either. It's all in the stock market using risk parity. Okay, so let's get you guys an investment so you guys can build out the portfolio safely. So a couple things that you guys are going to need, okay, is, and I'm just going to go ahead and put up a drawing here, okay? You're going to need a few things. So we need to know, number one, and if you guys can type this all in at the same time. So number one, we need to know investment capital, okay? So I'm going to put this up on the screen. So investment capital. And I'm just put investment cap. Number two, we're gonna need your cell phone. So we can send you a text with it. For the screenshot, we're gonna send you. And number three, we're gonna need your email address. Okay. So if you guys can type in those things into the chat box, I'm gonna go to work building portfolios for you. Okay, awesome. And Kern is in first. He's gonna start with 50,000. Beautiful, Kern. Okay. Okay, beautiful. So I'm gonna get to work on Kern's. So I'm gonna do that in my other screen here, guys, because once again, we do not give away everything on YouTube. We used to do that. We had people literally making hundreds of thousands of dollars and they wouldn't even sign up for our service. And so what we did to cut them off was cut them off. So sorry, freeloaders. See you later. All right, guys, we have families to feed. We have bills to pay as well. All right. So very good. So I'm going to go over to my position sheet here. Okay. And this is what you guys can have access to as clients. And I'm going to type in, very good. And John, did you get that 62 for Lori first?
Yeah, I got it.
Okay, cool. I'm going to change it to 50 so I can send that to Kern. Oh, dang. I didn't even realize how many people had typed in already. Awesome. Woo, we're going to get some portfolios built today. Awesome, Kern. Yeah, and hey, bud, I saw your comment on YouTube. Definitely, bud, get repositioned back into ETHE too, bud. Yeah, you're gonna want to own that for the rest of your life. Okay. Okay. Very good. Yeah. Yep. This is our high risk, Kern. We have a much smaller percentage in our 90-10 blend. Yep. Okay. So Kern, your 50K allocation is coming to you right now. Okay. Okay, so Kern's 50K allocation is in there. All right, Lori, I'm gonna do your, okay. And Kern, if you can type in your email too, bud. Okay. Let's see here. All right, very, very good. Okay, good. And so we got Kern for the 50K. Oh no, I do see your email, Kern. Sorry, I did see that. I had another chat come through in between. Nice. I love the email, Kern. It matches your profile pic on YouTube. Very cool. I laughed when I saw it too. Okay, good. Okay, so Horace wants to do 10,000 bucks in 5 tranches. Well, that won't work, Reggie. And now, if you're going to do 50,000 and $10,000 tranches, that will work because our asset, our minimum allocation size is larger than $2,000. And Reggie, if you have your microphone, bud, go ahead and Kern, you're cracking me up, man. Okay, cool. Yeah, Reggie, unmute your microphone, bud, if you have it.
It's unmuted.
Oh, cool. Hey, Reggie, how's it going, bud?
Good. How we doing?
Good, good. So did you want to do $50,000 over 10 tranches?
Yes.
Okay, cool. Perfect. Awesome, bud. And perfect. So we can definitely do that and that will match. Okay. So very good. And I see Reggie did type in. Okay, perfect, bud. All right. So Reggie, let's see here. Do we have 2 Reggies? Because one's, let's see. Oh, okay. Yep, got it. Okay. So I'm getting Reggie's ready now. Perfect, Reggie. And yeah, but if you want to build these in, you know, $10,000 per week, you can do that as well. Okay. Yep. So I'll send you one for the 10 grand. Okay. And then that way, just each week you can add those in. Okay.
Good.
Perfect, buddy. Awesome,
you.
Reggie. And that is coming to your inbox now. Okay. Perfect. And John, I'm typing that into the Telegram now too for you, bud. Okay. Beautiful. Let's see here. Kayleen's going to do 100K. Awesome, Kayleen. Very, very good. Okay. So doing the 100K for Kayleen next. So jumping over to the position calculator. Getting Kayleen that 100K allocation. Awesome, Kayleen. Kayleen's so far going in with 100. That's the biggest one so far. We had a couple of people go in yesterday with, I think 250 was our largest one. So very good. And awesome, Kayleen, your 100K is in your Zoom inbox there. Okay, we'll also get that over to your email and your text messages here in just a minute, okay? Beautiful. Okay, guys, very, very good. Beautiful. Okay, and I just want to make sure we have everyone.
Dean.
Yeah.
Camlu, do you see an amount for Camlu?
I don't, John. I was actually just looking for it. Cam, if you can, bud, just type in how much total you'd like to invest. And we'll get that over for you, bud. And then we need your, I believe your cell phone number too. Yeah, so Cam Lou, if you can type in your total investment capital. Okay, that would be awesome. And Lori, John already got your email out to you. It's awesome, John. What awesome customer service. Okay, beautiful. So Cam Lou, if you can simply type in your investment capital, bud, and your cell phone, we'll get your 6, bud. Okay. Okay. So Cam gonna do 50K. Perfect, Cam. So I'm gonna type in 50 into the position calculator here, guys. Oh, nice. Thank you, John. That was awesome. Okay, cool. Perfect. John's got my 6. We got Cam 6. Beautiful. I love it. Okay, cool. And if you guys don't know that term, it's something that the Air Force uses to basically say, I got your back. I got your 6. All right. Very, very good. Let's do some US military lingo here in the webinar today. Okay, cool. Cam, you got your 50K allocation. Beautiful, bud. Awesome. Look forward to seeing how that works for you. You guys are buying into an awesome dip here too. I love it. Okay, perfect. Awesome. Yeah. So Rich jumped in and he says, won't let me adjust it. Yeah, Rich. So I'll show you guys in just a minute here, Rich. We'll jump over to the position calculator and I'll show you how you can adjust it once you're a client. But yeah, guys, we just give you the standard portfolio. Unless you have more than $500,000 to invest today, then we'll give you the 90-10 blend. Okay, cool.
The 90-10 one. Hello, can you hear me?
Yeah.
The 90-10 one, looking
Okay.
back at what you showed us about a half an hour ago, the difference between the 90-10 one and the high risk, high return one was so big, it raises the question, why should you, given that you've got, assuming you have the risk covered by the the insurance on the account, UVXY thing,
Yeah.
assuming you've got the risk covered, why would you ever want to go to anything less than the high return, high risk?
Beautiful question, Rich. Okay. And I'm so glad you asked that, Rich. Okay. So it's basically to our clients do that to mitigate. Okay. So I'm just going to say mitigate volatility. So I'm just going to say mitigate volatility. Right. So when you have more assets, Rich, and with the pro, you're actually going to have 8 assets that counterbalance each other. You're going to own 4,500 of the largest companies on planet Earth today that the billionaires all have 99% of their net worth in. Okay. So our clients really like to do that 90-10 blend, Rich, to mitigate volatility and to reduce volatility. Great.
Doesn't that just mitigate them out of the return?
Hey, yeah, technically, yes, it does. But yeah, so it's not for everyone, right? And so, some of our clients that are retired, they like to mitigate the volatility. I have clients that are retired that have $1 million behind our high risk strategy. I have clients that, well, no, actually, I got a guy in LA that has like 2.6 behind our high risk strategy today. Okay, so yeah, he's not following that suit, Rich, and it's completely up to you, bud. And the coolest thing too, Rich, is you can plug and play and scale with our portfolios literally all you want. Okay, so what I'm going to do here, guys, too, is just to kind of show you that. What I'm going to do is put up something here really quick so we can. I'm going to attempt to do this to where we can play along here and show you guys as much as possible, but without giving you the exact portfolio. Okay, so what I'm going to do is simply put a little block here. Okay, and I think from here to here, it should cover it. And what I'm now going to do, jump over to my position calculator. And I think, yeah, how perfect. Okay, cool. So it's really neat, guys. And what I can do here is type in, okay, a slightly different amount. So, and so this is our most defensive strategy. So I'm going to type in 500,000. Okay. You guys are going to see how the number of shares and the amounts all change up right here, but the ratios actually stay the same. Okay. Now, so pretty neat on that. And now what I'm also going to do is actually tighten up how I do that. Okay. So I'm going to do another drawing here. Actually, that won't work. I'll do another drawing here. And that way I can clear off one of these. Perfect. So I'm gonna do a couple things for you here, Rich. And yeah, so what Rich is most interested in, guys, is our most aggressive strategy. So we're gonna talk about that. But I want to just show you guys how the shares and the cost are right here. Okay, and the asset allocation is right here. Very similar to what hedge funds do. Okay, look, but it's really cool. Now I'm going to enter in a different number. Let's say you have 250,000 in your IRA. You want to put that to work behind our safest strategy. Okay, but let's say you want to put, in our most aggressive strategy. Okay, our boot camp high risk. Let's say you want to put another 250,000 there. You type that in, guys. Look at that. Calculates. So you guys can plug and play and scale and go build these portfolios literally across your entire financial ecosystem. It's really, really cool. Okay. Now, in Kern, I'm going to use this to point out your question earlier. So Kern says, wow, isn't the 57% allocation in the best investment in the world right now? Isn't that heavy? Yeah, Kern, but look, we call it high risk, high growth on purpose. Now, is that the asset allocation in our safest strategy that we offer? Absolutely not. It's 4%. Okay. So great questions, Kern, and I'm glad you gave me the opportunity to really explain that. Okay. Very, very good. Cool, guys. So very, very good. All right. Awesome. Okay. So just wanted to show you guys how that all works. Okay. And, basically without revealing the entire system, guys, show you what does work. Okay. So beautiful. All right, guys. So we got portfolios for, I think it was 1, 2, 3, 4, 5, 6 individuals out of the 21 people in here. Okay, so beautiful. Now, anyone else? If we haven't got you a portfolio yet, can we get you one before we get you those discounts, guys? Okay. And I'm actually going to go ahead because we have so many people in here. I'm actually going to go ahead and type in the discount opportunities into the chat box now too. Because I actually had a person write, how do we get signed up now? So what I'm going to do, guys, is simply type those into the chat box. Okay. Cool. So and just know, guys, it's limited seating. Okay. And so I'm going to post that. I'm going to give you guys a $15,000 discount on the lifetime. It's been 92% of our revenue. If you guys want to start with the annual and save $2,000 on that, you can do that as well. So those discounts are in that chat box now. Okay. So once again, guys, for the high risk, high reward portfolios, if you have under $500,000, we want you to go for it and make as much money. If you have over $500,000, you probably want to start scaling back some risk. So we'll give you the 90-10, but so far everyone asked for less than 500,000 in allocation today. So guys, let's go build out those portfolios so you guys can put yourself in the billionaire's shoes. Okay. All right, guys. So guys, we have a flat fee structure that will save you and your family literally tens of thousands of dollars or possibly even hundreds of thousands, depending on your investment capital. Welcome to a one-time lifetime fee that doesn't scale with your profits. Okay. And guys, those big discounts, they're already in the chat box now for you to take advantage of. So Now, just saving you money isn't the best part. We're also going to educate you and meet with you twice a week in our client webinars. This way you actually learn everything we understand. Then you can relay this knowledge to your kids and grandkids to create many generations of wealth. Okay, guys. So bonus alert. I want to call your attention to this screen. Okay. Yeah, so you have to click on the blue link, Sanjita. Oh, you know what? I'll send it to you directly too, bud. Okay, you know what? I'll send it to all of you guys directly. So Sanjita and Dar already typed in asking for the discount. So I'm going to send it to every person in here. Okay, so Sanjita, it's in your inbox. Dar, it's in your inbox. You guys are the first people to ask. So I'm sending you those now. Okay, Jim, I'm sending you the discounts. And I see your microphone's unmuted. Know the truth to be free. It's in your inbox now. Okay, Reggie, yep, I'm going to get them to you too, buddy. Okay, cool. Okay, Cameron, yep, I'll get you next. All right, Cameron, I'm sending it to you now, bud. Okay, Cameron was the fourth person to ask, so I sent it to him. Okay, but I'm going to go down the list now. So let's see here. Calvin McKay, your discount is in your Zoom tech there, bud. Dar, you have yours. Jacob Morris, I'm sending you the discounts, bud. Okay, and you guys can select from either one. Nice. Yep. Nice. 612,000 in build outs today. Awesome, John. And thank you there, bud. Awesome commentary, John. I love it, bud. Okay. And let's see here. And actually, John, let's see here. We'll talk about some training later too, so we can actually have you post some stuff as we're going through the webinars. Actually, I got some good ideas. Okay, so we can get these people helped out in more resources than we did today moving forward. Okay, so Cam Liu, and guys, wait till you see our client side. It's in these ones, it's okay. Kern says I'm getting FOMO here. Okay, Kern, it's coming to your inbox now, bud. It's in your Zoom chat box. Sorry, Kern, but I just had some guys ask for it immediately. So, okay, let's see here, and I think it was Cam Liu last. Kayleen, so we got Kayleen. Okay, so Cam, sending you your discounts. Okay, Kayleen, discounts are in your inbox, ma'am. Kern, it's in your inbox, bud. Michael Proof, coming to your inbox. Okay, Nad, coming to your inbox, bud. Coming in hot. Okay, Reggie, coming to your inbox, bud. And I think I already sent it to you, but I'm just going down my list here. I don't want to miss anyone or not give someone the opportunity to get the discount. Okay, Ronald Gamble, coming to you right now, bud. Abe, coming to you right now. Okay, and very, very good. And let's see here. John, coming to your inbox. My D-Town 30, coming to your inbox. Okay, guys, and you just have to click on the blue link, okay? Click on those blue links. It's going to take you to another page. That's where you can use your information. Oh, and really important too, guys, use your cell phone. Okay, guys. And when you get signed up today, and I almost have them to everyone. Let's see here. Okay, Tyrone, discount is in your inbox now, bud. Okay, so we got all 30 some people their discount links. Okay, cool. Beautiful. Okay, guys, very, very good. All right, now let's see here. So the bonus alert, guys. Okay, so anyone that takes advantage of that, yes, it's a $2,000 discount, Kern, on that annual price. That is correct. Yep, you'll make that in no time, bud. So let's just, I'm gonna give Kern some numbers here too. So Kern asked for a $50,000 investment today, guys. Okay, so I'm gonna give Kern some numbers here. So if Kern would have put in $50,000 at the start of the year, okay, at this point today, Kern's would be sitting on $145,000 profit. Okay, we're gonna get you education, guys, every Tuesday and Thursday live, or I'm sorry, every Tuesday and Friday live with Jason Cox, our Chief Investment Officer. And only, guys, when you get signed up and go from being on the free trial and you upgrade, okay, to being a paid client, you're gonna get the free one-on-one session with Jason Cox, our Chief Investment Officer, when you join our team today. It's really, really cool. Okay, guys, this is a $2,000 value free when you upgrade today. So we're going to see who takes advantage of the first 3 spots. So we have the annual price out there. And guys, if you don't see the discounts in your inbox, just send me a message. Okay. And John or I will get you those discounts. Okay. And they are in the chat box there for everyone to take advantage of as well. But if someone needs it directly messaged over to them, just let me know. Or if you need a text message sent to you, happy to do that for you as well. Just type in your number into the chat box, guys. Okay. Also too, guys, if you want to chat too before you get signed up, just type in your cell phone number and your full name, and I'll give you a call after the webinar. Okay. Perfect. Nice. Very, very good. Awesome. And hi, I'm so glad you were able to make it in here. I was worried when I got that text. Very good. Beautiful, guys. All right. So beautiful. And Sanjita, we look forward to working with you. Dar, we look forward to working with you guys. It's pretty cool. Our lifetime price used to be $19,997. We had 87 clients come in at that level. What we did, guys, just so you know too, and so this is just, you guys will get a feel for how transparent I am, probably over transparent here. But yeah, guys, so we tested this out during the month of July. Okay. July is typically our slowest month. July and August have typically been our slowest month. And we said, okay, let's just give these guys a huge discount because everyone's going to be on the beach and at the lake and doing July things. Okay, guys. But yeah, we used to charge $19,997. Like I said, we brought in 87 clients at that level. We did test out a big discount that you guys have in your inbox now. And it's been 92% of our revenue since we did it. And it's lifted all revenues across the board. So we're just going to run with that price. Okay. So beautiful. Now, who has any additional questions here too? Hey, and Rich, did you have any more questions there, bud? And Jim, I see your microphone.
Take care of something. I'm just trying to pick up following on this tablet. Mine is pretty tablet. It's hard to see. I'm not sure I'm following all, but I'm trying.
Okay, I'm sorry, Rich. I couldn't hear your audio. John, could you hear what Rich said?
No, he sounds like a robot.
Okay, bummer. Yeah, Rich.
Oh well,
just
I'm not a robot. But I just talk with difficulty.
Oh, there we go. Now I hear you loud and clear. Now it's perfect.
I must not have been very close to my microphone. Maybe I was too far away from my microphone. I was saying I just picked it up. I had to step away and take care of something else shortly. So I just got back as you were trying, I think you were trying to address me.
Okay, cool. Yeah, I just wanted to see if you had any questions, Rich. Just wanted to make sure we had you taken care of and we answered any questions you may have.
Yeah, not, I don't have any questions at the moment. You're doing very well with all your, as many conversations as you're carrying on at once here. It's hard to believe you can even keep up with it all, but you know, you're doing well.
Thank you, Rich. Appreciate that, bud.
Okay.
Yeah, and I'll tell you, Rich, just open and honest here is, heck, when you have 12 people communicating with you at the same time, it definitely gets tough. But hey, Rich, life isn't easy, right? And I like challenges, so I'm one of those messed up people. I like a challenge.
You do an awfully good job of keeping up with it all. It's hard to believe.
Awesome. Thank you, Rich. Appreciate your time. How
Okay.
when's the last time you got out on the water in Miami?
Well, that's been a few years, actually. Hate to say that, but that's true.
Okay. Bummer. Well, maybe we can go fishing one day.
There you go. I'd like to get back to diving again, but I don't expect to do it too often because I'm 74 now.
Okay. Nice. Man, what's the biggest grouper you've seen in Florida?
Well, I tell you, bigger than a grouper is that when I was out once fishing, diving around Valley Light, I saw a whale shark come by.
Whoa, how cool. I didn't even know they were in this area.
Yeah, this one just floating on top of the water right in front of my eyes. Unbelievable. About 50 times bigger than me, you know. And
How cool, Rich.
I just flew out of the water as fast as I could, you know, to get back in the boat. But you know, they don't want me. They just eat vegetation, I guess, or filtration, eat by filtration of the water
Y-
they take through their gills and all, I guess.
Yep.
I don't know. Anyway, I saw another one somewhere recently. I forget where, but it was in the water close to somebody, and so I've not been the only one to have that happen.
Yep. How cool. Well, awesome, Rich. And thank you, Bud, for that. Awesome, Rich. Appreciate that. And you guys, Kern asked really quick. He says, last question, why don't you have something allocated to Tesla? And we do, Kern. So we don't have exact exposure to Tesla, the individual stock. We don't like to own individual stocks because we don't like to try to guess from the 18,000 publicly traded companies which one's the best. We simply buy entire asset classes, okay, to get better performance. Yeah. So yeah, Kern, go look at what Tesla's. You know what? I'm actually going to do this while everyone's here. Okay, great. Kern had a great question, and I'm going to show Kern actually why we did that. Okay, guys. So make sure when you guys do click on those links, though, you use your cell phone numbers. Okay, when you get signed up, that way it'll get you guys allocated properly. Okay. So just really quick, guys, I'm gonna help Kern understand why we don't use Tesla. Okay, or an individual stock for that matter. Okay, guys. So let's look at Tesla over the past 5 years. Okay, it's returned, you know, a nice 2,515%. That's really good, right? But you had to put all your eggs in one basket to do that. I'm not going to do that. I'm not going to tell my clients to do that. Okay. Look, if we own the TQQQ, okay, over the last 5 years, we can still make, okay, an insane return, 1,369% by owning every single technology company on planet Earth. I'm going to do that instead. Okay. And pretty neat too, guys. Look, if it, and I'll show you a great example of that too, Kern. Okay. Let's see here on the, let's see, 1 year. What's Tesla on the 1 year too? I don't think it'll be better actually. Let's see. It actually is a hair better. But yeah, so guys, here's the thing with TQQQ. Okay, this is just a leverage fund. This is in our safe alpha portfolio. Look, guys, this position over the past decade has smoked Tesla. Okay, this is just the TQQQ ETF. This is in our safe alpha strategy that we don't give away for free anymore. Okay, it's up 17,268% in the last 10 and a half years, beating the return of Tesla in that same span of time. Okay, but guess what? And to pick the one out of 18,000 that's publicly traded, you simply own the best and ensure you own the best for the rest of your life. Because this is the coolest thing about these ETFs, guys. They literally sell the laggards every quarter for us and they buy the alphas. So you can just put your money into something like TQQQ, sit back and relax over, I think the next decade's probably going to give you similar returns. 17,268%. Okay. So great question, Kern. Yeah. So we're not going to take on the risk to have an individual company unless, okay, guys, look, if you've been following us on YouTube for a while, you know we put people in Moderna and Freeport McMoran, and you both saw what both those stocks did after we told people to do that. Okay. But look, conversely, we told people to buy the TQQQ when we used to give out the strategies for free. We told them to buy it $70. This asset. It's now 151. Okay. And look, guys, this return of 17,000% over the past decade and a half, that beats every investment hedge fund on planet Earth. That beats every option trader to death over the past 10 and a half years. Every swing trading system, anything. There's nothing that's made that return. Okay, so great question, Kern. Yeah, no, we're going to take the safer route. Okay. Now, another thing too, Kern, so in our more aggressive strategy, okay, we actually have FNGU where you get a 10% position in Tesla, and then it's leveraged at 3 times. So then you actually, instead of putting 10% of your portfolio in, the net weighting is almost closer to 30 because it has a 3x leverage factor built into it. Okay, guys, why do we use leverage right now too? It's because if you don't during quantitative easing, you're an idiot. And here's the thing too, guys. We counterbalance all of our long side assets. Okay. And look, guys, we have less volatility on this 90-10 blend than the frickin' S&P 500. And we're still beating it to the upside. Okay. Now let's also, Kern, while you're talking about that. So I think year to date, it might actually be up more than 37, but so let's look at Tesla year to date return. Okay, now it's at 43.51%. The other thing with that too, Kern, look, our high risk strategy has never touched Tesla. Okay, it's up 290%. Right. Okay, cool. Oh yeah, Melinda, it was the TQQQ ETF. We don't use individual stocks, guys. Okay. So beautiful. And team, I appreciate your time to join us here today. Okay. Make sure you guys get clicked on those links in the chat box there. Okay. Important note, guys, we only allow 3 clients to join our team each day. Okay. If you're in the seminar now, you can always call John. His number is 505-610-1334. Yeah, Melinda, it's TQQQ. Yep. But we're not focused on that at all in this presentation. Okay, I just wanted to give Kern a good example there. Okay, guys.
Dean,
Yeah.
Dean, do you have a biotech that like a T biotech?
We don't, Rich. I have an incredible hedge fund manager in biotech. If you want his number, though, I'd be happy to give that to you offline. No, we won't.
Do you?
Yeah, there's no all the big hypey biotech stuff, guys. That opportunity's already came and gone. You want to be in cryptos are going to outperform everything over the next decade, 2 decades, 3 decades, 4 decades, the rest of our lifetimes. That's where you guys want to have your money.
Is there no ultra pro biotech?
I don't know. It's not a sector we care about right now, Rich. It's not a good time to care about it.
Oh yeah. Okay.
Yeah. No, it's Amazon's gonna take every bio company on the planet out anyway, so I don't want to be in front of that steamroller. No thanks.
Okay.
Yeah, nope, too much risk. I don't want to pick up pennies in front of a steamroller.
All right. Well, whatever works.
Yeah, great question though, bud. Okay, guys. So on behalf of my partners and I, thank you kindly for taking the time to join us today. We hope you learned a few things and started making some money with our portfolios. In the webinar now, click on the link in the chat box to sign up now, guys. To take that first spot. Once again, we had a total of, I think it was 38 people, at least that I saw anyways, in the webinar today. All of you guys have those links to save on our membership here in your inbox. Okay. Weird. Okay, cool. Very good. Okay, awesome, guys. So just really quick disclaimer, there's no magic formula to getting rich. Success in investment vehicles with the best prospects for price appreciation can only be achieved through proper and rigorous research and analysis. Okay, guys. So once again, if you have any additional questions, give me a call, 505-322-7515. You want me to look over your portfolio, guys, see where you're misallocated? see the stuff that help you clean up your room a little bit, happy to do that for you. Did that with a gentleman earlier this week, helped him clean out $355,000 of dead money, help him reallocate. This morning, I helped the lady clear out $157,000 of dead money, get it reallocated, and really performing for her. So,
Yeah, Dean, is there a regular time of day when we could check back in for another session?
Yeah, absolutely, Rich. Great question. So Friday, Rich, Jason, my chief investment officer, he's going to be hosting a webinar at 2 Eastern time. Okay. So that's the next one you can jump on. And then also, Rich, I'll be back every Monday and Wednesday like clockwork, as long as there's not a holiday, to do the non-client free webinar.
At what time again?
So my webinar is going to be at 12 Eastern every Monday and Wednesday. Okay. And then Jason, my chief investment officer, he's going to be hosting his webinars every Tuesday and Friday at 2 Eastern Standard Time. So client webinars are at 2 Eastern Time. Okay. Non-client webinars are at 12 Eastern Time. And it's really cool too, Rich. You can actually go to that client webinar. They just boot you out before the end, and they start talking about portfolios.
I wish I could write that down as fast as you can. So could you send me a summary in my email of that stuff?
Yeah, and I'll tell you what, Rich, just send me a text, bud, to the number on your screen. Just say, "Hey, Dean, it's Rich," and I'll send everything over to you. Okay? Yeah, just send me a text, Rich, to this number, okay? And I'll be happy to send that over to you.
A text message to that number.
Yep, and
what
just
number
say,
is that again?
That's my cell phone number. It's 505 322 7515.
505-222-7515.
Yep, 505 322 7515.
Oh, I see. 322. Yeah,
Yep.
I think I wrote that on my phone earlier. I'll try to follow up on that. Thank you.
Okay. Yeah, send me a text, Rich. I'll be happy to send all that stuff over to you, bud.
Okay.
Okay,
Thanks
very
again.
good. Yep, my pleasure. Okay, folks, very, very good. Now, let's see if anyone has some questions. So Calvin McKay, Dar, Jacob, John Holton, Kayleen Kern, Ronald Gamble, Scott Stanek, Lisa, Melinda Jones, My D-Town 30, Sanjita, and Tyrone. Any additional questions?
Do you think we're ever going to get a nice negative move out of the China crisis?
No, I don't think that the China, great question, Rich. I don't think the China crisis will spill over to the United States. I think it's an incredible opportunity to slam that market with money though, Rich. And we are absolutely doing that with our pro portfolio that's globally diversified.
Which ETF do you use to take advantage of that?
Yeah. So we're using EDC, Rich. Great question.
EDC, Epsilon David Samuel?
Cat. So E is in elephant, D is in dog, C is in cat.
Edward, D dog, C cat.
You got it, Rich. Yep.
Okay, thank you very much.
Hey, my pleasure. Okay, Kayleen says, how often do you rotate portfolios? So great question, Kayleen. Over our company's 3-year history, it's worked out to about once a month. We've made a lot less changes this year because the market's just been dead easy. I mean, dead obvious. Yeah, we've only made 6 changes this year. But look, and it's a great question too, Kayleen, because look, we could go, guys, 2 months without making a change. We could make 2 changes in a month. It all depends on what the Fed does to control the bond market, the stock market, the precious metals market, the value of our dollar. It's crazy, guys, between the Fed and our crooks in charge of the destruction of the dollar. They control our $120 trillion entire financial ecosystem. Okay, but if we just monitor and listen to the crooks that are in charge of the destruction of the dollar, guys, we can make a lot of money from them. And they're in there to get rich. Let's get rich off these a-holes. Okay. So I know it's a little grim to talk about, but hey, the older I get in life, the more transparent I become. It's just lay it all out there. You know, what do you have to lose? Very, very cool. Great question, Kayleen. Let's see here. Melinda says, I only have $2,000 to invest. Husband's getting more in Feb. Yeah, don't touch Forex, Melinda. It's a joke. But yeah, what I would do if I were you, Melinda, and if you were, let's just say if you were Aunt Melinda and you say, hey, Dean, I have $2,000 to invest, you know, what would I put it in? I would put it in Ethereum. I think you're going to get the most bang for your buck. Yep. Over the next decade, 2 decades, 3 decades, 4 decades, the rest of your life. Yep. Yeah, definitely not Forex. That's dead money.
Ethereum, did you say Ethereum?
Yes, sir. Yep. First, we had a question that they didn't have enough to build out our portfolios. Rich, so I told them Ethereum's their best bet over the next decade.
Yeah.
Okay.
Thank
And
you very
Melinda,
much again.
yeah, absolutely, Rich. And Melinda, I typed that into your chat box there. Yep. Yeah, Kern had such a good question. Okay, so Kern asked, why am I so bullish on the fastest growing technology in the world? So that's basically it, Kern. So look, so Kern asked, you know, hey, Dean, why are you so bullish on Ethereum and the Ethereum investment trust? I'm gonna cover 3 reasons, Kern. Okay, and you know what? I'm gonna write this up on the screen. Great question. And you know, honestly, I don't get to do this enough. So let's see here. So awesome, Kern. So I'm gonna go ahead and what I'm gonna do is build a big box here again. Okay, and we're gonna cover why Jason and I are look, and this is important to know too, Kern. Look, we made a lot on Ethereum already, okay, but we're still buying it, and we're still buying more and as fast as we can. Okay, so here's the 3 reasons. Okay, number 1, it's the fastest growing technology on planet Earth. Okay. So that's number 1. That's why we're so bullish on it. So fastest growing tech on Earth. Number 2, I think the returns are going to be similar to buying Microsoft in the 1980s over the next 30, 40 years. Okay. So the returns are going to be similar. Anyone know how much Microsoft is up from its inception to this point today, guys? Okay, it's north of 3. It's north of 3 million%. Okay.
Wow.
Okay. And I'm just going to write up here buying MSFT. Yeah, Karen, it's one of those things, but look, I haven't got super excited about an asset after I found the leveraged ETFs outside. So that's been the thing I've been the most excited about over the past 3 years since we started this company. Okay. All right. And number 3, guys, 90% of people that are really successful, 90% of the millionaires on planet Earth don't own it yet. Okay. And it's funny, and I'm glad you brought this up, Kern. If there was a number 4, I would also tell you that once that thing becomes an ETF, you're going to have an $80 trillion global pension fund market that can buy it. Yeah, Kayleen asked thoughts on the Bitcoin ETF that just started trading that's based on the futures contract. Garbage, Kayleen. Nope, do not touch it with a 10-foot pole. Get out of it. What we have our clients into is the investment trust that Grayscale owns instead. So I'm going to type that into the chat box. Okay. So, and then when you guys sign up, you'll see exactly how we're allocated. So yeah, and I just typed that in. Great question, Kayleen. Do you have your mic, Kayleen? You've had some great questions. I'd love to hear from you if you do. All right, we have Beverly Dukes jump in. Beverly Dukes, you're unmuted. Calvin McKay, Dar, you all are unmuted. Jump in with any questions. John Holton, Kayleen, Kern. Know the truth to be free. Kern, I'd love to hear from you too, bud. You're cracking me up with your Mr. Bean stuff too, bud. Let's see here. Know the truth to be free is rich. Okay, good. Lisa, if you have any questions, jump in. Melinda, please jump in if you have any questions, ma'am. Okay. Oh, Kayleen's also listening to another trade room. Ooh, that's a good way to lose money. Oof, scary. Scary, scary, scary. But best of luck, Kayleen. Okay. Technology, Sanjita, fastest growing technology, not organic matter. Yeah, apples to oranges. Great question though. Yeah, no, and do you work in the scientific field, Sanjita? Yes, awesome. Are you engineer? Doctor. Yep, awesome. I love it, Sanjita. Very cool. And we actually have, I think we have like 200 doctors working with us. Their favorite thing, Sanjita, I can tell you, is time optimization. They're busy folks. They like to, just trade when it's critical and make some changes to the portfolio and restructure when it's critical. Very cool. Yep, we have doctors in the US, we have doctors in Canada, we have doctors in Singapore, we have a doctor in Dubai. Yeah, and I think most of them are either in California though, Texas or Florida. Just from the guys I've talked to, and ladies too. Okay, awesome. Any other questions here from the team? Okay, guys, and was everyone able to click on those blue links? Okay. Awesome, Dar. Dar said, thanks so much. Yep. Awesome. Dar, look forward to the honor of helping you and your family grow. Sanjita, I see your mic's open, bud. Do you have a question? Yeah, Melinda, do you have TD Ameritrade or Schwab or who's your broker? Yeah, just set up a brokerage account, Melinda, and then yeah, you'll be able to buy that. Great question. Very cool. Yeah, and okay. I don't know if MetaTrader lets you trade stocks, but if they do, yeah, you'll be able to buy it in there. I think it might be a Forex account. I'm not sure. I learned that basically the banks control Forex a long time ago and said, oh my Lord. Okay, cool. Nice. Kern just said he got some ETH. All right, Kern. Awesome. And did you buy all the other shares to go with it? That's critical too, guys. You can't cherry pick it. You got to buy the portfolios in the exact ratios we design. Okay, let's see here. Very, very good. All right, Kern. So make sure to take a look at that screenshot and just buy the exact number of shares. That way you stay in perfect balance. Hey, Sanjita, did you have a question? My pleasure, Kern. Yeah. Beautiful, guys. Okay, cool. All right, so we are looking forward to seeing who are the first 3 investors that take the spots today, guys. Absolutely looking forward to the honor of helping you and your family grow your capital. Use risk parity so you can do it safely, folks. Counterbalance those long side asset risks and then ensure the portfolio on top. Okay. So literally, guys, we're going to teach you how to get off the motorcycle without the helmet on going down the freeway. Okay. If you do our high risk, you're going to be in an armored Hummer going down the freeway instead. If you do the 90-10, you're going to put your capital into a tank. Okay. And so when that car comes, and the car is going to come and hit you at some point, if you're on the motorcycle without the helmet on, you might die. Okay. Or be severely injured. Like most of the people I talked to that lost millions of dollars last year because they weren't properly hedged. Okay. But guys, look, you go down the road in a tank, you get hit by that car loses, nothing happens to you. Okay. So it's a beautiful analogy that our clients actually came up with. And I just had a gentleman out of Tampa. He's like, Dean, you show people how to put their life savings into a frickin' tank, and I love it. It's risk parity, guys. It's a beautiful thing. And it's not hype. You're not going to get rich overnight. But guess what, guys? It's what the billionaires are doing. Okay. I've learned a lot from them. And I still study them every day. And I study how they control our Fed and how they control our crooks in charge of the destruction of the dollar. We study the heck out of what those crooks do. And we benefit from it. We can't beat them. Let's join them. All right, guys. Beautiful, Sanjita. So yeah, call me at your convenience. Sanjita, definitely looking forward to speaking with you. Okay. And yeah, team, look forward to working with you all. All right. Rich, I just got your text, buddy. So thank you for that, bud. Okay. Awesome. Yeah. And just so everyone knows too, guys, you can replay the session. Click on the same link that you used to get here in about 5 minutes, guys. It will auto replay and take you to the recorded YouTube version. Okay. Very good. All right. So Sanjita, Calvin, Dar, Jacob, John, Kayleen, Kern, Rich, Lisa, Melinda, My D-Town 30, Ronald, Scott, and Tyrone. Want to thank you all kindly from the bottom of my heart to take the time to join us today, guys. Time's the only commodity we cannot purchase. So I want to thank you kindly for sharing some of your time with me today. Okay. And with the group here. So guys, and also if you're watching the video on YouTube later and you have more than 500,000 to invest, call me 505-322-7515. Okay. And very good. Now, guys, if you're watching this on YouTube, you have less than 500,000 to invest, call John 505-610-1334. We absolutely look forward to working with you folks. Once again, on my behalf, my name's Dean Gallagher. I'm a partner with the firm. I want to thank you kindly for taking the time to join us today, folks. All right. Yeah, Kern said, thanks for being so open and patient. Yeah, Kern, it's my pleasure, bud. Thank you for joining us. I absolutely appreciate your time. Kayleen, thank you, ma'am, for joining us, and thank you for typing in. I absolutely appreciate that. Okay. Okay, great. And folks, here's to happiness, health, and wealth. We look forward to helping you grow on that last one. Okay. Have a great day, team. And we look forward to welcoming you into our family and growing capital safely together, folks. Have a wonderful team. Have a wonderful day. And guys, just don't forget, we're going to be on, Jason's going to be on Friday, 2 Eastern Standard Time. And then I'll be back next Monday and Wednesday at 12 Eastern. So if you guys still need some more time, still need to get to know us a little bit more, got it. Okay. Understand that. And guys, you want to chat one-on-one, give me a call, 505-322-7515. Thank you kindly, team, for your time and attention. Here's to happiness, health, and wealth. We look forward to helping you with the third. Okay. Yeah, Ron. So I'm just going to help you out with that, Ron. Yeah, if you have less than 10K, okay, that's what you want to buy, Ron. I just typed it into you. Okay. Cool. Very, very good. And then, yeah, I'm going to type in John's number for you too, Ron. It's 505-610. Okay. Yeah. Give John a call, Ronald. He'll get you the scholarship price, bud. So he can still help you. Okay. Cool.
610 what?
Oh, yeah, Rich. You're good, but I have your number. We're good. Yeah.
Yeah,
I'll
I wanted the less than 10K number, 505-610.
1334.
Thank you.
Yes, sir. You got it. Okay, cool. Okay.
By the way, I forget, do you take those, are those limits you abide by or what?
I'm not sure what you said there, Rich. We'll call you in a minute here. Okay, bud? Okay, perfect, guys. Well, hey, team, thank you kindly. I'm gonna go ahead and shut down the webinar, guys. You can replay it in just a minute. And we look forward to helping you and your family grow in the safest manner possible using risk parity, guys. Once again, here's to happiness, health, and wealth. We look forward to helping you on the latter side of that. Have a great day, team.